Understanding Investments a Few Minutes at a Time by Daniel Dower from Chapter 4, Investing Nomenclature, Issue Number 16, Common Stock. Stock most commonly refers to common stock, the simplest form of ownership in a corporation. If Pepsi is worth $100 billion and has 1 billion shares of outstanding common stock, each share is worth $100. An investor holding 100 shares owns 0.00001% of Pepsi. In reality, there are many variations of stock. For example, some stocks have certain voting rights, others do not. The vast majority of investors will not control enough stock to have any meaningful impact on how a company is run. Although there is much cynicism about how boards of directors behave, the shareholders of companies elect and are represented by the board of directors, usually 10 to 20 people in a public corporation. The board of directors hires the company's executives who hire other staff and run its day-to-day business. The board may form subcommittees, hire outside expert advice, etc. At times, a company's stock price will rise or fall due to the purchase or sale of a large portion of stock by an activist shareholder, one who has established a reputation for shaking things up and or getting the board of directors to change direction. Any such determinations are highly subjective, but they are the type of news that an investor may want to take into consideration. Preferred stock. Preferred stock is similar to common stock, but carries various forms of special rights and privileges. Many preferred stocks pay a preferred dividend, much like interest on a loan. In order of payments, preferred dividends come after bonds and debt, but before dividends paid to common stockholders. Preferred stock often carries with it the option to convert to common stock at some predetermined price, as well as special voting rights. In some cases, the founders retain sufficient preferred voting rights to control their company entirely, even though substantial shares of common stock have been issued. The average investor is likely not well enough informed to purchase preferred stock. Before doing so, please do your homework. The first stop on that road should be reading Security Analysis by Graham and Dodd.